Ever see those online currency exchanges, where their weights are like a few cents off from each other? Makes you wonder, who makes money off that, right?
Right.
Well, today we're going deep on that, what's it called? Arbitrage trading, where those tiny differences can mean serious cash.
It's like finding hidden connections, that make the whole market tick.
Exactly. We're going to break down how it works, why it's totally legit, and maybe even uncover some, secret opportunities you never knew about.
And it's not just for, like, Wall Street hotshots.
Exactly. So this document we have, it talks about arbitrage being like buying low and selling high, but with stocks. So it's kind of like finding a deal at one store and flipping it for a profit at another, right?
Yeah, exactly. Like, imagine a stock. Let's call it XYZ. Say it's trading for, like, $100 on the New York Stock Exchange.
Okay, the NYSE for our listener.
Right, one of the biggest out there. But here's the thing. At the same time, XYZ is going for, say, 101 woners on the London Stock Exchange.
Another huge player globally. So our arbitrage trader wouldn't just, sit on their hands, would they?
No way. They'd jump on that, buy a ton of XYZ on the NYSE for $100 each, and then immediately turn around, sell it on the LSE for $101. Boom.
Quick profit just from knowing where to look.
Exactly.
But here's where it gets really interesting. This document says that this is actually, a good thing for the market. Honestly, that surprised me.
Yeah, it seems counterintuitive at first.
Totally.
Right. But those would seem like small price differences. When you multiply them by thousands, millions of shares.
It adds up.
Big profits. And, on a larger scale, what they're doing actually makes the whole market more efficient.
Okay, now you gotta explain that one. How does that work?
So think of it like a self-balancing scale, right? When arbitrage traders buy on one exchange where the price is lower, it pushes the price up there.
Supply and demand.
Exactly. And then selling on the higher priced exchange pushes the price down there.
Bringing it closer to equilibrium.
Right. They bring those two prices closer together, shrinking that gap until there's no longer an opportunity for arbitrage.
So they're like the invisible hand of the market, but for these tiny price discrepancies.
Yeah, and it's not just stock exchanges. This happens with currencies, commodities, even cryptocurrencies all over the place.
So the next time we see, a difference in prices between two exchanges,
Could be arbitrage traders doing their thing.
working their magic behind the scenes.
A lot of times, with algorithms now, it's happening super fast, too.
That's wild. Well, that's arbitrage trading, a hidden world of profit and market efficiency. Thanks for joining us on this deep dive. It's been fascinating.
Yeah, for sure.
And for our listeners, keep an eye out for those price differences. You never know what you might find.